It's about that time of day again. My name is Joseph. It's already Monday evening, July 23rd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and of course, we can't forget about the mighty euro. Starting off this evening, crude oil is bearish and trading at the low of a range this evening, and that tells me to look for buying opportunities after the sellers complete their two-try rule tomorrow morning. I've got a key pendulum swing level on the oil chart for tonight, so stay tuned for more on that in just a moment. S&P is bullish with a strong run higher this evening, and I got my eyes on buying opportunities. I'm going to use the low of a key spike in channel tomorrow morning. Nasdaq is bullish with a strong spike higher tonight, and with the target back up at last week's high, I'm trying to avoid the temptation to chase this move higher, and I'm waiting for opportunities to buy at support levels such as a hidden channel tomorrow morning. Gold is bearish into a short-term trading range this evening. Very, very small range, but very important on the yellow metal tonight. And that tells me to look for selling opportunities up above the highs of that range. And of course, anytime we have a range, I'm looking for the two-try rule. We'll dig into that chart in just a moment. And of course, we can't forget about the euro. The euro is bullish with the buyers trying to retest this morning's high. And my plan is to wait for opportunities to use a resistance trend line as support, right, for a seller failure pattern tomorrow morning. Boy, speaking of tomorrow morning, I got a bunch of great setups, right, that are right on the edge of triggering for us tomorrow. So we're taking a look at the charts in a moment. We got some big news this week. We got some big opportunities into the end of the month this week. Man, it feels to be back here. Hope you guys had a great weekend. Before we jump into our charts, though, I got to remind you guys, if you're on YouTube right now, you can find a detailed description of this entire trading strategy written out right here at my blog at Sideways Markets. If you have any questions about anything covered in this video, please remember to drop those questions in the comment section below. If you like what you see, please help support this channel by subscribing. Tell a few friends while you're doing it, right? And make sure you hit the bell icon so you're notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over to sidewaysmarkets.com and make sure you join our mailing list. That's right. If you want to make sure you stay tuned with everything we do here at School of Trade, head over here to the blog at Sideways Markets. I'll put all the links in the description of the YouTube video. And while you're here, join our mailing list. Promise no spam. I won't waste your time or my time on that. But give me your name and your email address, and I'll send you an email every time I publish something new. Also want to remind you, too, if you're on social media, lower left-hand corner, StockTwits, Twitter, Facebook, LinkedIn, whatever you spend your time on each day, I'm always posting charts, videos, quotes, all kinds of great, right? All kinds of great content on my social media channels. You won't find that anywhere else, right? So grab the social links in the lower left-hand corner. And speaking of charts, how about those charts from tonight's video? All the charts from tonight's video. How easy is this? You can have them ready for download on your computer. Just follow that link, and you'll be head over to the page. We have all the charts ready to download for you guys tomorrow. And speaking of tomorrow, how about that free pass? If you're not a member here at School of Trade, if you're not an advanced member, I've got a special invite for you to come out and join me in the trade room, get a deep dive, and learn more about everything we do here at School of Trade. Grab that free pass in the upper right-hand corner. And please don't forget, if you got any questions, I always encourage you guys to reach out and ask for help if you need it. Drop those questions in the comment section below, right? And don't forget, you can always hit me up on live support or call the toll-free number right on the homepage of our website. All right, hope you guys had a great weekend out there. Boy, oh boy, another one of those magical summertime weekends. Only got so many of them, right? Only got so many of them, so we got to make the most of them. I spent some time on Sunday with some friends I hadn't seen in the longest time. What a great weekend. But we're back to the action, though. It is always great to see you guys here back in the action with me. Had a great day today in our trade room, and we're getting ready for tomorrow's session Tuesday, July 24th. I do want to kind of prepare you guys for what may be a kick up in volatility here this week. We're going into the last week of the month here. The 27th is Friday. It's not the actual end of the month, but what happens here as we get closer towards the end of the month. Traders start making more risk-tolerant decisions, and combine that with lower volume that we typically see into the end of the month, and we do typically see some increased volatility. So be aware of that overall as we go into the rest of this week. We made it through OPEX last week. We made it through some of the key news numbers last week, and really now we get a lot of news this week here. We got PMI composite flash tomorrow at 9:45. Remember, PMI composite stands for Purchasing Managers Index, right? Purchasing Managers Index, right? The prices that purchasing managers are paying, which they will then eventually relay or pass down to the end consumer, right? This is inflation we're talking about. And when you think about inflation, we think about the dollar. When I think about the dollar, I think currencies, right? Think about currencies, I think about gold. So tomorrow, 9:45, dollar index, gold, euro, those are definitely going to be the big market movers, right, tomorrow morning around that PMI composite flash. Then we got some new home sales numbers here, right, on Wednesday. That's going to be big news for us. A slew of news on Thursday. And then we get this GDP number on Friday. We're hearing rumors right now that we may see a 5 print on Friday's GDP. If we see a 5 print on Friday's GDP, these markets are going to most likely fundamentally change for the foreseeable future. So very, very interesting to see how these markets may react as we lead in and as we start seeing more analysts estimates for what Friday's GDP is going to be coming out as. So very, very exciting week as far as economic news goes. We just heard big numbers out of Google. We'll take a look at that in a second on Nasdaq. But very, very big week ahead of us. And again, with that PMI number tomorrow, euro, gold, dollar index, basically currencies and metals tomorrow are definitely going to be on our radar. So keep that in mind. We'll talk about euro and gold here in just a moment. So big, big week ahead of us. It's not the end of the month, but we're getting there. We're getting there. We do expect to see that volatility start to increase as we get closer. All right, let's jump in. We get a lot to cover here tonight. We got crude oil, S&P, Nasdaq, gold, and of course we can't forget about, we'll finish up tonight on the mighty euro. Crude is bearish, and trading at the low of last week's trading range. Are we surprised that we're back at the low of this range right now, right? We talked about selling off the high of this range in last night's newsletter, not last night, but last Thursday night, right? So if you guys were watching patiently for this, right, we knew the plan was to sell off that high. Momentum at this point is certainly bearish. There's no doubt about that, but I'm looking to buy the lows of this range, right? So my plan, I'm not going to buy right now. My plan is to either wait for the completion of this pendulum swing down at 67.26, right, followed by a seller failure then going higher, or, I'll wait for a strong push higher and then look to buy the pullback using this resistance trend line. We'll try to use some key levels of support here on the way back higher. So, bottom line is, if I kind of rewind the tape here, if you recall from last week, we finished last week in this real nasty, nasty range. We talked about selling off the high, and buying off the low. Nice, strong move up. That's the one try, We talk about the 2-try rule. 1 try, 2 try, and of course the market collapses back down, The amount of that move above the range, is now a key component here where I'm looking for my key buying opportunities here tomorrow. 67.26, That's going to be what we call our pendulum swing. So again, that's why I said earlier, if you tuned in last week to the newsletter, you were ready for this 1 try, 2 try, failure, strength pullback, back down to retest that low, Buyers try once, buyers try twice. When they fail, sellers start attacking And by literally selling into their stop losses, that results in that strong move down, and then you're selling pullbacks as close to the high of that range, right? We talked about this last week, right? And drops back down, right? So everything worked pretty much according to plan right now. Now we've got that big pendulum swing up, pendulum swing back down, and again, that pendulum swing, I really want to try to wait until we get down to that 67.26 area here. You can tell right now that we do have one try, two try off the moving average, so we do have that two try rule in play at this point. It just hasn't quite achieved its full pendulum swing. So in all reality, I'm looking for one of two scenarios to be a buyer right now. The first one would be we finish off the pendulum swing. We then want to look for, right, at that point, this would be a one try, two try down into that pendulum swing. And then we can look for that classic seller failure into buyer strength, right, into bullish, that's a horrible line there, right, into bullish pullback, right, for that move going back up, right, to retest the high of that range, right? That's their target. So it's a seller failure, right, into a buyer pullback, right? It's a two try rule into a seller failure, into buyer strength, right, and then to a bull pullback. Okay, not to worry. I'm going to give you more details on that in just a second. So stay tuned on, right? Stay tuned on that. Now, if this is, we've seen some crazy price action in the month of July. Like I mentioned last week, it's relatively low volume, impulsive markets. So let's just say, because this does qualify for the two try rule, right? It's one try down. We pull back to the moving average. Second try off the moving average. We get a double bottom here. Sorry, no double bottom yet. The ideal would be a lower low, right? That would be ideal. That would get us the one try, two try. Whenever I get two tries that are greater than, right? Whenever I get the second try that's greater than the first, what that does is it ropes in all the breakout sellers. And because we know most breakouts fail in liquid markets, right? Like this being crude oil, a very liquid market, one try, two try, then we can look for that failure here. Now the problem we have though is that look, you can see there's a trend line coming down overhead. So I really don't want to be a buyer directly into that trend line. I realize this is a good spot to be buying, but remember the problem is that if there's resistance in the way, it's going to be difficult to rally the troops, right? We want as many buyers as possible buying at that area, right? That will help our trade. Well, we're not going to get that many excited buyers, right, with that trend line right overhead. So what I'd rather do is, knowing that trend line is there, again, this might end up being one try, two try, right, and then we get back above it, right? But that's basically the principle here. I want to get back above that trend line, right? I want to get back above it, use it, and then go. And the ideal situation here will be to use the moving average as support, right? Will be to use the trend line as support, to use the low of the range as support, right? And then we might be able to get two opportunities here. One, and then two on the way back up to retest the high. It may just jump off it. We may not get that second pullback, but that would be my plan if we don't, right? If we don't get that next leg lower. So again, ultimately here, we've got to respect that falling resistance right now. It's either up and back above to buy that low, or we've got to wait for that one, two, get it lower, right, and then we'll try to use it right after we get that pendulum swing. I'll tell you right now, though, I'm going to feel a whole lot better buying into a seller failure once we get that pendulum swing. That'd be a whole lot more confidence there, strength, pull back, right, and back up, right, to retest that high. Now, real quick, I know I've covered a lot so far, pendulum swing, two try rule, right, buying, failure patterns, all these terminology. If you're here for the first time today, it's great to have the opportunity to work with you. I want to make sure I give you a shortcut. I want to make sure I give you a deep dive, a better rundown of everything I'm talking about here right now. So what I want to do is give you a free trading course in the upper right-hand corner. This will not cover everything that we do here at School of Trade, but it's going to give you a primer, all the terminology, all the tools I use, all the stuff that you're going to need to really understand and follow along and benefit the most from this nightly newsletter. I put a lot of effort in this every night. I know you guys look forward to it every night as well. I want to make sure you get as much value as possible from this newsletter. So grab that free course in the upper right-hand corner. There's a little information icon there, right? And that will give you the link to register for our free trading class. And I'll send you a video and I'll teach you about everything we do, right, in our trade room every day. That way you know what patterns are which and what tools I like to use the most in my trading strategy. So we know the plan now, right, for the buyers, right? Buyers, relatively easy. What about sellers here right now? Well, remember, if we go back to the high, let's say we go back to the highs here, one try, two try, right? Same thing looking back here, same thing, right? Trying to go up, one try, two try, failure, strength, pull back down, right? One try, two try, failure into strength, strength into pullback, right, and back down to retest that low, right? One try, two try, failure, strength, pullback, back to retest the high. One try, two try, failure, strength, pullback, back to retest the low. Stay away from the middle, buy low, sell high, use that two-try rule. Now, how do we break out of a range? What does a range breakout look like? It looks like this: strength, pullback, strength. If those buyers would have kept this party going to the upside early in today's session, this would be a bull market, right? The sellers can do it too. They can easily go strength, pullback, strength. I mean, if we see this thing continue running lower on strength, I can't just buy it, right? I got to go with it. So if we do see another strong leg lower here, all right, we'll be in the ballpark here once we push through, right, that pendulum swing. But again, I'm watching that pendulum swing for two tries, failure, back up into that range, right? Same thing here. One try, two try. If we see it really jump, find that new channel, right, and then buy the low of that channel, right? I am not trying to predict a breakout, because if you think you can predict a breakout, right, what did that move tell you earlier? And don't tell me divergence, because divergence is the world's least reliable tool I've ever used, right, during range bound markets. It's almost impossible to use momentum divergence, moving average divergence. You're gonna find yourself on the wrong side of more trades that way. This is a good example, right? What a strong move higher, right? How on earth would you know that this move wasn't going to continue? Oh, it's a high of a range. Right? That's the reason why. Very difficult to predict breakouts, but if we do see a strength, pullback strength, right, then we can look for that new higher high, find that channel. Now we've got something we can sink our teeth into, and now we can be aggressive with it, buying off that low. Because just a strong move higher is not enough, right, to be able to predict that breakout. And again, I don't want to hear any of that. Well, I used stochastic divergence, and you probably haven't been using that very long, because I've tried many different tools over the years, right, to predict breakouts. And the one thing I've learned is that in liquid markets, most breakouts fail. And the best way to trade them is to anticipate that failure. All right, speaking of range-bound markets, here's another range-bound market. We left off last week with ranges. We're back again this week with some ranges here. Not as bad as we were at the end of last week, right? But the S&P is definitely bullish, and we're definitely trading at the high of a range this evening. Now, this recent move higher is very strong, and that tells me to look for at least one more leg higher tomorrow, right? That's second try. But it's important not to forget where we are on this chart. The high of the range tells me to look for buying opportunities on the pullback, buying opportunities at support, right? But if we keep going higher, we've really got to be careful buying above the high of this range and buying into that prior week high. Now, again, if you recall from last week, right, we had this move off of that low, right, off that high, right? We're coming down last week, and we had that channel, right? We talked about that channel coming down. We wanted to sell the high of that channel. This was, of course, was late last week. And look what happened. They come all the way back down. What do? They double bottom at that low. Now remember, when a market is trending, bear trend, and we double bottom, what does that tell you? Does it tell you we're automatically bullish? No, it means we're range bound. Where do we find the range? It's those two double bottoms, and then you mark up that high. right? That creates your range. So now that we know where that range is, now zoom back in, and where are we? At the top of that trading range. Now, we're at the top of the range, and just kind of the opposite of what we just talked about on oil, right? Yes, we are at the top of the range. Not a good place to be buying, right? Really not a great place to be buying right now. But what don't we have that we had on crude? On crude oil, we had the opportunity for a 2-try, right? It was a low of the range, but we'd already seen 1 try, 2 try. Okay, so there, I can't sell that anymore. Okay, now if you told me, Joe, I got a strong move down here, I know we're at the low of the range, I'm going to give it a shot, I would say, okay, you can probably sell the pullback to that moving average, but don't expect a home run scenario. In other words, the strength of that move lower, it's just like we have right now, or we had earlier on the crude, right? Strong move up, that much momentum, we're probably not going to turn right around. It's probably going to give us a pullback and one more attempt to go back to that high. This is what I'm looking for on the S&P tomorrow. And then, hey, maybe we get lucky and we can catch a big runner up to that prior week high, right? So here's my big, strong run up. Just like earlier today on oil, that big, strong run up, the chances of this market turning around and running right back down to that low are very, very small. Yes, it might happen. It could easily happen. We're July trading right now, summertime slowdown. It could easily happen. It's not likely, though. What is more likely now is for buyers to be waiting here to buy that pullback, right? Now, I want to remind you where we are. Top of the range, right? So I'm probably not going to get more than just a retest of that high, right? So look for that double top, and then I'll look for that runner, right, to hold that runner up to that prior week high. So strong move up. It's a reversal, right? It's got a trend reversal off of that low. Anytime I see a reversal, I always then start looking to draw those hidden channels, right? So I'm going off these highs right now. I'm drawing the hidden channel. I'm bringing it down to them lows, right? And trying to buy off of that low, right? Trying to buy off of that low. Get that battle zone adjusted a little bit there for us, right? So we know we got these highs. Marking these highs up. I want to buy that second try. Again, I'm not expecting a whole lot out of that second try, but I am expecting with this much movement, I'm expecting quite a bit of buyers now to want to buy that next dip, irregardless of the fact that this is a range-bound market. Again, now, if we'd have seen 1 try, 2 try here, then this would be a whole different story. I would already say, nope, we've already used our 2 bullets, right? I'm not going to go trying to buy right now. The bottom line is I'm looking for a pullback, right, to buy that dip, right? And then again, the target's going to be back to retest the high, target 1, and then second target, runner target, is that prior week high back at 28.18 and a quarter. Now, how would we do that, right? So now we know the bulls have momentum. We know we don't want to buy high. We want to buy low. How do we buy low? At support. Now, I've got key support here at the low of this channel. I have key support here at a rising support trend line. I've got key support at prior swings as well. So there's no shortage of key support. But all 1, 2, 3, 4 of these, all 4 of these support levels have one thing in common. When we test them, we're going to be below the moving average. And when I find myself below the moving average in a bull trending environment, I know you're going to have sellers who are going to try to reverse this trend, but the odds are not in their favor, right? Momentum is bullish right now. So if we see some sellers who are trying to sell, right, that pullback, now we know where their stops are, and we can look to buy into their stops. That will produce that strength move higher. I can then take my time, wait for the pullback, and buy that pullback. So again, it's going to be seller failure into buyer strength, right, into buyer pullback, failure, pullback, right, in that bull momentum going higher. Now again, it's so important though, remember, if we pull back off these highs, where's your first target? It's back to retest that high. You've got to be a lot more conservative because it's the high of that range. So target 1, right, and then of course target 2, we'll leave that runner, right? We'll leave that runner up at that prior week high. Now, what if we keep going higher here, right? What if we keep going higher here? If we keep going higher, if we don't pull back, then all of a sudden this looks like a spiking channel, right? If we keep going higher here and we don't pull back, now this starts looking like a spiking channel. And what do we know about spiking channels? Traps, right? Traps. Wait for that, pull back, right, and go. If we keep seeing that spiking channel, right, I'm looking for that trap low. I'll still be trying to buy pullbacks. I'll still be looking for that second leg, right? That second move higher here. And again, I'm still concerned with buying high. So I'll buy the pullback instead. Now, last but not least here, how do we reverse? What does a reversal look like? There are three things to look for a reversal, right? It's called the 1, 2, 3 reversal. It goes something like this. 1, strong move down. 2, pull back to the moving average. 3, strong move lower. 1, 2, 3. 1, strong move against the trend. 2, pull back to the moving average. Give the bears the opportunity to take control of this market. 3, strong move down to confirm they have control. Then what do? No, I'm not selling this move lower, right? You only know its strength in hindsight. You can't predict it. Okay, it's not a reliable sell because why? Because the market is bullish. Momentum is bullish. We have to wait for the momentum now to turn bearish. Then, new lower low, mark it up. New higher highs, right? Or back to those highs. Find that new channel. And at that point, I'm using that level of resistance and combined with the top of that channel for selling opportunities now. Back down to where? Back down to the low of that range, 27.93 area, right, for the sell. All right, guys. So again, we're trying to buy the pullback here on the S&P. 1 try, 2 try, failure, strength, pullback, back up. If we go higher here, we're waiting for that deep pullback, right? Buying off that low. How do we reverse? Strength, pullback, strength, new channel, right? Sell at the high of that channel, back down to retest that low. The plan is here. And again, if you want to learn more about ranges, channels, everything we're talking about here right now, a much deeper dive, right? Grab that free trading course in the upper right-hand corner and get a deeper dive into the whole entire strategy, right? It'll be the best use of the next hour and a half, right, you could ever invest in your trading career. So that's the plan there for the S&P, right? Let's keep going. How about some Nasdaq? How about that Nasdaq, right? Wicked bullish, as they say back home in the native land, right? Wicked bullish here tonight. Nasdaq is bullish in the wake of a positive earning, extremely positive earnings from Google this evening. And as the buyers try to retest last week's high, I'm waiting patiently for buying opportunities down at support levels, such as this hidden channel coming up off the lows tomorrow morning. It's also important to remember that the price is quite high on the chart already. So if we continue to see strength continuing higher overnight into the pre-market, the plan will still remain. Keep waiting for buying opportunities using deep pullbacks, which means traps, seller failures, right? And of course, using support levels as we go higher. Now, of course, it's important, remember back, let's zoom out here again. It's important to really see kind of the big picture here, right, on this Nasdaq, right? So basically what's happening is we've got these two highs. Those line up those lows. We're bouncing off those lows, and we assume right now, right, we're trying to make a run back up to retest last week's high at 37.75, and then from there, I wouldn't be surprised, right, if we make a run up into that 74.75, 74.80 area, right? That's the continuation later on this week. Now, where's the objective right now? 74.3775, right? Back to that high, right? As we always say, the objective is always, when we get a deep pullback, the objective is always to retest that high. Once we get to retest the high, we wait and see, right? Do we fade? If we do, buy that low, right, as a range. So we're looking at this as somewhat of a trading range, a big picture trading range with the potential of this being a very large, right, bull channel. And again, you put the vertical line on here right now. I mean, there's definitely potential here that we're up around that 74.68, 74.70 area, if not higher, right, by early tomorrow morning. So what's the plan here right now? We got a bull market. but we're very close to the objective, right? Remember, there are three questions you always want to be asking. Who has control? Where's the objective? And then where are we right now? The control is fully in the hands of the buyers. The objective is right overhead at 37.75. And where are we right now? We're 10 points away. We're very close to reaching the market's objective. So if I were to ask you, is this a good spot to be buying right now? The answer would be no, right? The place you want to be buying was down here, right? Closer to that moving average with a lot larger space before we get to that target. If you start buying right now, your stop has to be way down here to protect your trade, and your target's very small. If you buy high, what ends up happening is the risk-reward ratio is flip-flops, right? The risk is this big, the reward is this big. See, I don't want that, right? I want it backwards. I want the reward to be here, right, and the risk to be like this, right? This is just basic 101, right? Get a bigger reward than we're taking for a risk. So this is an easy math equation, right? If I buy right now, where's my stop got to be? It's got to be somewhere down below these lows, because if you put it too tight up here, what will happen is you'll get stopped out just to see it go without you. The problem is the stop has to be too wide right now. You're too far away from support levels to be able to absorb, right, any pullback in the market right now. So not a good spot to be buying, right? That's the bottom line. The risk versus reward is too out of the, right? It's too out of whack. It doesn't make much sense. So what I'm doing is I'm just waiting now, because I don't want to buy up here. I don't want to chase, right, more up here. I'm basically waiting for price to pull back to a support level so I can get that risk reward, right, into position, right? So I look at this now and go, okay, my risk is here, right? My reward is here. How could I flip-flop that, right? How could I turn that on its side? What if we draw a trend line off these highs, bring it up off that low? Now, that may not look correct at first, but look, if you add that midline in, yeah, see, it fits like a glove. So that tells me that there's a hidden channel on this chart right now. I'd love to use this channel to be a buyer off that low. Then, if I can buy off that low, now my risk can be here, right, and my reward can be here. That's a much better trade. And no matter what happens on that trade, you do that consistently over a long period of time, you're going to make money that way, right? That's what you want to be always thinking. How can I get in at a level of support where the reward is substantially larger in comparison to the risk of the take to protect that trade? So that's what's going through my mind right now. So as we pull back, right, the market will probably seem very bearish. We then look for those sellers to try to sell. The moving average will usually come over like this, right? And those pullbacks, it's a seller failure into buyer strength, into buyer pullback, and looking to buy off of that low, right? Again, it's a bull market, so a seller failure pattern coming off of support is a great buying opportunity. Then we don't chase after it. We wait for the pullback. We keep trying to buy at support, right? Look for that buy off of that low. What if we keep going higher here, right? What if this thing keeps going higher here? We get a big spike. What if it turns into a spike in channel? If it turns into a spike in channel here, what my main priority is to get back to the base of that channel. I'm going to look for that nice deep pullback, and I'm still going to be trying to buy as low as possible. So even if it does keep grinding higher, the problem is that a lot of traders aren't trading this news. They're waiting now that they've seen the reaction to that news, now they're waiting to get into this move and ride this momentum, right? Those buyers, those patient professionals are going to be waiting down at levels of support. If we do keep going higher, my plan stays the same, to keep looking for a nice deep pullback. And again, when I get that deep pullback, it's probably going to be, again, if we see a spike in channel going higher here, you mark up that prior swing right there, right? And then it's literally it's trap low, seller failure into failure strength, right, into pullback, and pullback back to retest the high, right? Trap low, seller failure, right? Buyer strength, buyer pullback. All those patterns now can be used. All we need to do is just wait for the move. We got to wait for it, right, to come our way here. And again, to learn more about traps, failures, pullback patterns, to learn more about these hidden channels, which are very, very easy to learn, grab that free trading course in the upper right-hand corner. You will not be disappointed by that. All right, let's keep going. Last but not least here, how do we reverse? What does a reversal look like? There's a couple things I'm watching here for a reversal. One would be the obvious, right? It would be a strength pullback strength, right? It'd be a strong move down, a pullback to the moving average, and a strong move through, right? Strength pullback strength, find that new channel, sell off the high of that channel, right? That's easy. The hard part about that is waiting for the reversal. Because I'll tell you right now, I learned this trick many years ago because I was someone who was always trying to sell that first pullback. The problem, though, is the market is the momentum is bullish at that point. Until we turn bearish, right, the odds are not in the favor of those sellers, and so buyers will buy into those failures. Right? They will buy right into your stops, right? It's easy to get a big order filled when you're buying and everyone else is selling, right? So remember, that's an easy way to get long for a big lot trade on Nasdaq tomorrow morning. So watch that failure there. But if we do see that strength, pullback strength, yeah, no problem, right? Then we'll find that sell, we'll sell off the high, right? That should be a pretty easy move back down again. Another thing I'm watching, obviously, is with that prior week high, because we know it's a potential range here, is watching it go up into a trading range, right? Double tops. If we see double tops the high, remember, don't buy high anymore, right? It's one try, two try, back up, we buy off that low, right? Remember, one try, two try, anytime we see a trading range, right? One try, two try, most range breakouts fail, and I'm looking for that, right? Looking for that range breakout failure to be a buyer off that second try. Well, if they can take this lower, right? If this goes 1, 2, a strong move down like we saw on the the S&P this morning, then we've got it, right? New bear channel. We can now look for those sells off the high, right, of that channel. So relatively easy playing. You just got to learn it. And again, don't forget, we'll be trading this market tomorrow morning with all of our members in the trade room. So come out and join me. How about some gold now? Quite the interesting chart here on the gold tonight. Gold is bearish with a strong move lower, which ultimately ended in a short-term trading range this evening. And that tells me to focus on selling opportunities using the two-try rule and buyer failures up above the range high tomorrow morning. Now, big question right now is, right, who has control of this market? Bears do. Strong move down, pull back, strong move through. Now, I want you to see this for a second because I'm going to touch on this on the euro in a few minutes here. Notice how far away the market gets from the moving average. Now, that is a clear sign this market has reversed. It's a strong move off the high. At that point, this isn't a bear market yet, but once we see it really run lower, right? Once we see it run lower, when I say run lower, you'll notice it never pulls back to the moving average. It's a very strong move down. Okay, now I want to keep that in the back of your mind here because when you look at the euro in a couple minutes, right, you're going to see a very big contrast between what the gold did and what the euro did. So give me a few minutes to finish up on gold. Then I want you to stick around for the euro because the euro is going to be a good comparison, right? It's a good contrast to it. So the bottom line is this strength pullback strength tells me we're bearish. The interesting part, though, is that we end, right, the day in a range. Now take that range, copy and paste it down. There's support. Bingo, right? Copy and paste it up. There's resistance. Even more important, right? That's resistance, and that's where I want to be selling right now, right? In a bear environment that double bottoms, we now know that's a range, right? We find that range. If I take the size of that range, copy and paste it down, right? That's support. Copy and paste it up. That's resistance. Why is that resistance so important? Because in a bear market, I want to sell above the high of that range, right? We talked this a lot last week, right? Remember this early in the month, right? Last week, it was one try, right? Two try. I want to get up into that level of resistance and then sell this sucker back down into that range. From there, we then look for that breakout pullback pattern, which requires, if you recall, that two-legged pullback The moving average has to be below the range, and we look for that sell, right? So when I see a trading range, one, I'm looking to sell, right, up above the high of that range, 2-try rule, and again, I can use the size of the range to project a key level of resistance. As the market goes lower, I can sell the continuation down here, but I have to see a strong enough breakout so I can get a two-legged pullback, right, and sell the moving average. Okay, so those are the two things I'm looking for here on this range, right? You'll notice there's my range now. There's my expansion higher. There's my expansion lower, right? Now, the support level really isn't that big of a concern for me because I really don't need to use it. What I need to use is that resistance level. So now that I know we're bearish and I know we're range bound, I want to sell above the top of that range at resistance. Okay, I've got one level of resistance is that range expansion, right? Literally as simple as take that rectangle, copy and paste it, and move it higher, move it lower. That's all I'm doing. It's very, very simple. You don't need complicated indicators to do that. Just got to know how to use your charts. Okay, now the next thing is, where else can I find resistance? I can also draw a trend line down, get that trend line up, right? That's another level of resistance. Definitely not as prime as the 28 area overhead, but that will also work later on in the process, right? Down, up, and go, right? That will also work later on in the process. So we'll keep our eye on that level of resistance. And really what I'd love to do is I'd love to get this reversal line in play. This is a prior support, right, which we can use hopefully as resistance. You'll notice they already came back and touched it once, but in my experience, right, you can usually wait for a larger move down and then come back, right, to use it. So we got lots of resistance. Top of the channel, right, reversal line, we got that range expansion. So we know where we want to be selling. What's the pattern we can use? 2-try rule, right? So 1 try, 2 try, failure, back down in, selling the top of that range, not selling into support, but selling at resistance because the market is bearish. What else? Strong move down. How strong? Strong enough to get the moving average coming through, and let's use that trend line, right? Let's use that trend line overhead as resistance. And where's my target going to be? Well, you'll notice we've broken free of this measured move here. So my target now is going to be right at whatever we can get our hands on here. If this is the highest part of the pullback, right, then our target is down at 19 even. But if we go higher here, right, let's say we go to the battle zone there. If we go higher, let's say, for example, here we go, right? If we go higher here, up to that reversal line, so to speak, right, the measured move is down at 1220. I'm using that first leg down, right? So it's 1, it's 2, it's 3, right? That will be my short-term measured move. Remember also as well, guys, if we get down to that measured move, don't give up on it. It will usually two-legged bounce, and then we can sell it back down, buyer failure, right? Trap pattern. We usually sell that thing back down again, right? Last but not least, how to reverse tomorrow. What does a reversal look like on this market? Strength, pullback, strength, right? Once we get that strength, pullback, strength, and again, I'm not trying to predict reversals, right? That's not my business plan. My plan is to wait for the market to turn. Then it's a much more reliable buy right off the low of that channel. And where are they going? You got it. Up to that measured move, up to that 35.2, right? The objective is to get back up, right, to retest that high. So very interesting chart tonight on the gold. And again, as I mentioned earlier, pay attention to when a market reverses, how it reacts around that moving average, because one thing you'll notice is that reversals jump away from the moving average. Now, ready? Let's go look at the euro, because now the euro is going to look a lot different. And you tell me, okay, is the euro bullish or is the euro bearish right now? The euro's bullish as the buyers reload and try once again to retest those previous highs. And my plan is to look for buying opportunities using the overhead resistance trend line as support with seller failure patterns tomorrow morning. Now, if we do get the reversal, if we do get some strength and this price collapses lower, that tells me the market has now turned bearish. And my plan at that point will be looking for selling opportunities using a hidden channel as resistance coming down overhead. Now, as we look at this chart right now, the most important thing that I do every day is I figure out what direction is momentum moving right now, right? In other words, who has control of this market? Strong move up, big second leg, right, up to that measured move, right? We talked about that last week on the newsletter. So the buyers, right, Thursday, Friday last week, they had clear control. Now remember, when a market's bullish, the bears have to take control, right? The bears have to take control. The bulls can't just give it to the bears, right? The bears have to take it. Now, how do the bears take it? Strength, pullback, strength. Strength, move down, pull back, and now look. Look at the moving average. Now remember how gold was jumping off the moving average, right? What is this doing? See how it's kind of stuck on the moving average right now? Okay, this is the same technique that tells you it's a flag instead of a bear channel, right? If you're familiar with flag patterns, right? Oh, by the way, if you want to learn more about flag patterns are by far the most complex, but they're very, very rewarding. Grab that free class, upper right-hand corner, right? If you want to really learn more about flag patterns, you'll find them right in the free trading course. Strength, pullback, no, I don't get it. I don't see the strength going lower here. Now, if we do see one more leg drop here now, absolutely, we have to call this a bear market, right? But right now, though, not enough. Not enough for me to call this, right, a bear market. And it's how the market is getting stuck around that moving average, right? See how it can't get away from it? Every time it comes down, it gets bought right back up, goes down, bought right back up, right? They ran out of time this afternoon because of the closing bell, but this is a great example of a strong move down, and the buyers are just kicking and screaming they want to get this back up to retest that high. So as of right now, who has control? The buyers do. Where's their objective? It's back up to retest these highs around 18,000, that big round number. Now, we got plenty of space to go higher as long as we can get through that falling resistance trend line. So what's the plan here? The plan's pretty simple, man. I want to see a strong move up, try to use that trend line, right, as a buy. Right, to use that trend line as a buy, right? Now, sometimes what happens is it does this, right? It'll be a strong move higher, right? Strong move higher. The moving average will come over. It'll slip below the moving average into a failure, strength, pullback, and gone, right? So what you're looking for is, I'm looking for that buy off the trend line, that buy off the failure, because again, it's still a bull market at that point, and then of course the buy off the pullback, right, going higher. Those are three patterns I'm watching for tomorrow morning. One is called a two-legged pullback into a reversal. The other is called a two-try failure. And of course, the last one, right, but certainly not least, is a simple pullback to the moving average. Don't chase after it. Okay, so that's going to be one good example there. That's what I want to buy here tomorrow. Now, if this thing happens to jump, right? If it jumps, don't chase after it, right? If it jumps here right now, I'm then going to look for, right? If it just jumps here right now, always want to find support. I'll find a new hidden channel to buy off that new hidden channel, right? Just don't jump with it, right? Don't buy with it as it goes higher. Buy the pullback. Much more reliable that way. If we collapse, right? If we collapse down here now, if we get down to that measured move, this market's bearish. No matter what the feeling in the market is. And at that point, we still have that falling resistance. I'm going to look for that one try, two try, buyer failure, and back down to sell, back down to that measured move. Like I said earlier, don't give up on a measured move just because we reach the measured move, because it will oftentimes bounce, and you'll be able to sell that bounce using that two-try failure, right? They try once, they try twice. Again, we're pulling back to the moving average, right? And we're selling off resistance. Buyers are trying to buy that pullback to reverse it, and we're looking to sell right into their stops for that move going lower. All right. If we do turn directions, we'll just sell off of that high. In the meantime, though, I'm looking for a buy going back up to retest that high. A great example here comparing the euro to the gold, and an easy way to use the moving average to confirm, has this market reversed? And oftentimes, if it hasn't reversed, the easy money is getting that move going back up to retest that high, or vice versa if the trend was bearish already. Boy, oh boy, I've covered a lot in tonight's video newsletter. I hope you guys enjoyed it. Hope you learned a lot. If you want even a deeper dive in this, right, learn the entire strategy. It's part of our free trial here at School of Trade. Grab that free trial, grab a free pass, come out and join me as a guest in our trade room and see what it's all about to be a member and trade with me every day in the trade room. I've got beginner, intermediate, advanced classes, and I'm always standing by to help you guys out 24/7, 365 if you need any help along the way. As always, my name is Joseph. Great to be back with you guys here this week. Keep your eyes open this week as we go into the end of the month. And of course, as always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.